Okay. Hey there. Hi, Dimitri.
Hi, Michelle.
I want to introduce to you is Dimitri Timm of Guaranteed Mortgage. He is one of my preferred lenders, and he has been in the lending business a long time, and he always gives us amazing advice each week and keeps us up to date with the interest rates. And I asked him to do a live interview with me because I realized people have a lot of lender questions, and there's a lot of that information out there, but the actual talking to a lender format I haven't seen as much. So I wanted to facilitate that. So welcome, Dimitri.
Thank you, Michelle.
Got a few questions for you. First, what's the current interest rate environment?
So I think the best way to kind of answer that question is pull up a chart and review kind of where rates have been and where they're at now. So let me just go ahead and pull that up for you. Okay, so this screen here kind of goes over what we've seen in the last 2 years of kind of where rates have been. And following along this chart here, around May of 2018, we saw kind of our highs, which this is just an average locked interest rate through Fannie and Freddie. And average rate there was around 5.25. And then since then, rates have definitely moved lower as we get into 2019. And then some trigger points here, which one would be as February 18th of 2020. On that date, Apple mentioned that they expect the coronavirus to be a much bigger issue that profits and industries might have trouble in the coming months. And from that day on, we saw the stock market continue to go down and rates improve, where we bottom out around March 9th here and of 2020. And we saw rates hit their basically all-time lows down in the low threes for a 30-year fix. And then a few other things happened right after that. After everybody came into the market to refinance and take advantage of those rates, we saw a capacity issue. So mortgages or banks had to almost artificially increase their rates to handle the volume that was coming into the pipeline. So, and you'll see that happen, rates come up here, leveling off around 3.5, 3.75. And then the next thing that triggered was the feds came in and started buying mortgage-backed securities, and then to help the market out again. And that's where we are at now. The feds are currently buying mortgage-backed securities in the sums of 10 to 25 billion per day, which are keeping interest rates on the lower side. And that's up to the 510,400, which is the true conforming limit. Anything above that, the feds are kind of calling that luxury loans, and we're not seeing the same pricing that we're seeing on the conforming, but that's basically where rates are right now in the low threes. So people are still taking advantage of that.
So do you expect them to go any lower? It doesn't seem like there's much room for that.
Yeah, there's as mentioned that they're in the lows right now, historic lows. We just recently seen, and we're just off that mark just a little bit. And there's some word on the street out there that rates will rates will get lower, but I don't expect that to happen. Just with the capacity issues that we just ran into and some of the issues that it caused into the secondary market. And I think we've seen kind of the lowest of the low rates. And I can see we might stay in this low rate environment for a while, but never know exactly what the crystal ball holds. But I think they'll hold low for a while, but I don't see them getting lower than where they are right now.
If I were obtaining a mortgage right now, what can I expect?
Yeah, great question. Well, the bigger question is, it depends on, what type of mortgage are you trying to obtain? Is it a refinance? Is it a purchase? Are you trying to get a jumbo loan, a VA, an FHA loan? But in general, industry-wide, purchase loans always get priority. So that process is going to be similar to what someone would experience in the past for the most part, other than appraisers are having issues with dealing with the COVID-19 and being able to enter homes, and homeowners allowing access. So that's part of the part of the issues that are going on the purchase side of things. Another part is with checking employment. So that has they're double, triple checking employment right now. And so that on the purchase side, those are the delays that you might see as a buyer on a purchase side. But for the most part, they can still close in a reasonable time frame, 30 days. Just depends on those two factors, really, of the appraisal and then the employment verifications. For refinances, there's still a lot of people taking advantage of the low rates, and those are taking longer just due to the sheer capacity and the amount of volume going into in the system right now.
I have a ton more questions, but I can see we're kind of getting a little long. But this one is the one I really want to know. If someone got laid off work or they're furloughed, is it possible to still get a mortgage?
So unfortunately, no. Yeah. So this, like I said, mentioned earlier, employment checks are being done, verifications throughout the whole process. Let's say you get traditionally paid on the 15th of the month, and then even you're a couple of days from closing, and then the 15th rolls by. They want to see that updated pay check just to make sure things haven't changed on their pay at all. So furloughs, unfortunately, you're going to have to wait until everyone's back to work if you got furloughed to meet the verification of employment condition. Yeah.
Wow. And are they still doing the 24-hour before it closed check?
Most definitely. Yeah. There's before docs go out, they're doing basically the beginning part of the process. They're doing a verification.
Did they ever stop? Did they ever stop doing that, or has it always been that way? Because
more recently, it's been 10 days within the note. They'll just make sure someone is still employed, but now they're doing not only the verification, updated pay stubs, self-employed borrowers. They're now looking into, are the deposits in the bank consistent to the income that's being used to qualify? So that's a new thing. As we go through this, there's new guidelines, changes that's happening. As more and more people are, being laid off or not being able to work. Go ahead. Well, Michelle, on your side, is there any advice that you're giving to your buyers and sellers in the marketplace?
Well, for buyers, we can't go in properties that are occupied. So just if we're going to a vacant property, we have to do a whole process. But I used to have a little bit more patience with buyers if they wanted to spend some time looking for a lender or what they thought the rate was or anything like that. But I'm like, no, you need to get with a lender right now. You need to figure out what you're qualified for. We don't know where prices are going, what's going to happen. You need to get somebody with you. And then if you're ready to go, you had mentioned earlier in an earlier conversation, you thought now is a really great time. They need to be ready to go. And then for sellers, when we look at an offer, we are looking at qualifications much more. It used to be just, they said they had the money. The lender said they had the money. Great. Now it's like, oh, I don't know. We have to check, I have to call the lender. I have to check that all the information is really what they say it is. And there's just more scrutiny in it, when we're in this process. So
great. Yeah. There's a lot of changes going on in our industry, and I don't know, was there anything else that you want to touch on? There's a ton of information out there that things are changing.
I think we continue it. I think our next one should be appraisals. That's a question that comes up. Realtors are talking with each other about these questions too. I mean, it's a good thing to touch on to get that out there. So maybe the next one we'll touch on.
Sounds good. Maybe we can get an appraiser on here and discuss, what they're seeing and how they're approaching getting into homes and their process and turn times.
Yeah, maybe and what he recommends.
Great. Okay. Well, thanks for having me, Michelle. I very much appreciate it. And we'll
Look forward to
catch you on the next show.
Okay, thanks.
Right.
Bye.
Bye.